If your company is starting to use QuickBooks for the very first time, then the first thing you must do is create a company file. This is perhaps one of the most critical things that you need to do. It's not that it's specifically difficult, but by preparing before you actually start the creation process, you will speed up the process and ensure that the company file and QuickBooks perform the way that you need them to. There are two categories of information that you should gather before you get started creating the file. First, make sure that you have some basic business information available. This includes the formal company name, the one that appears on paperwork, such as incorporation papers or those that create your DBA. You should also know the business entity type. Are you a sole proprietor, an LLC, a partnership, or some type of corporation? You also may have a TIN or an EIN. This would be especially important if you're paying employees. You will also need to know the date that you plan on using as the start date for accounts. In other words, if you're not a brand new business, or even if you are, what is the date at which you're going to start tracking things using QuickBooks? Now, these are things that you may or may not already know, but they're basic pieces of business information that don't change over time, so you can collect them anytime and get them ready to use. The second type of information you should collect, though, needs to be current, as it does change, and it can change not only month to month, but even day to day. This includes things like your most recent bank, loan, and credit card statements, so you can create those accounts and put the current liabilities for them. You should make sure that you're using the statements that match the start date for using QuickBooks. In other words, it may be February, but if you want to start back in January, then you need to start with the January statements. You also should collect any currently due bills that have not been paid, as well as any records of money that is due to you from your customers. If you carry inventory, you should have a listing of your current inventory, including current quantities on hand. It's helpful to have employee, customer, vendor, and product lists available as well, so that you can enter at least some of the most used from those lists. And that way, it will be done, and people won't have to do that as they start using QuickBooks. This will simply save the time of needing to set up each of these entries individually as you encounter them when you do business. Lastly, any assets the company owns should be entered as well. This includes not only a description, but also things like the date they were purchased and the original purchase price. Having these things in front of you will help speed up the creation of the company file and reduce the amount of searching for paperwork that will be necessary during that time. Now, I do want to warn you of a little something, and that is that setting up the company file can be time-consuming. Even for a very simple business that is just starting, it will probably require about 30 minutes to go through the wizard. If it's a more advanced company, if you have a lot of records or a lot of accounts that you need to enter, and especially if you have a lot of inventory products, it could take hours. Now, I don't want that to dissuade you. This is necessary. It's important to get this file set up and set up correctly and accurately. And this is probably the biggest amount of time that you'll have to invest in order to get QuickBooks to work the way that you need it to. But it is definitely time well spent. And if you don't do it now, you'll just have to do it throughout your day. And that can be a lot more frustrating. The short recommendation here is make sure you set aside enough time to get started using QuickBooks. You can't just install it in the morning and be ready to use it directly after that. It's a little bit of what we call front-end heavy investment. So those are the basic things that you need to gather, but there are just a couple more things that I want to mention, and they are about accounting decisions that will need to be made. If you're not the person who's making them, or if you're already an existing company, then you may just need to verify them with management or with your accountant before you start using QuickBooks. The first is whether your company uses the cash or accrual accounting method. This was discussed as part of our accounting primer. If you're unsure which method you use or which method to use, consult with your current bookkeeper, accountant, or even your tax attorney. The second accounting question is, what accounting periods do you use? For a lot of companies, this is simply the calendar year. Corporations may utilize a fiscal year that does not necessarily run from January 1st to December 31st. This is again something that your accountant or attorney who did the paperwork for your corporation can assist you in determining. It needs to be accurate. After all of these things have to do with accurately setting up the company file. While many settings can be changed at any time, it's important to be accurate as soon as possible so QuickBooks can be accurate in recording information. And also, it can then be correctly presented, whether that be by producing reports now or generating tax forms a year from now. As they say, the devil is in the details. In this case, investing time in gathering accurate information and making informed accounting decisions will simply ensure accuracy and ease of use from the very beginning. While QuickBooks is designed to simplify sales and bookkeeping processes, it can only do what we give it the information to do. And this is the first critical step in ensuring we set it up so that it can do so.